All right, so good morning to all of you who have joined us this morning. I just want to be sure that you can hear me. Can I get some confirmation?
Yes, we can.
Excellent. Great. So thank you once again to all those who have joined us this morning. I think the French say avant l'heure, ce n'est pas l'heure, après l'heure, ce n'est pas l'heure, l'heure c'est l'heure, which means we should start on time. And so to those who have joined on time, I would ask humbly that you share the link with others who could benefit from this session. So my name is Robert Jato, the Chief Servant at Chartered Institute of Bankers Ghana. So you're welcome on behalf of the Governing Council of Chartered Institute of Bankers Ghana. Welcome to this thought leadership event on crypto assets, central bank digital currencies, and the gold coin, the Ghana gold coin. Our mandate at the Chartered Institute of Bankers Ghana is to promote banking education and also regulate the practice of the banking profession. People ask me, what does that actually mean? It means really developing trusted professionals for the financial services sector. It means putting ethics and sustainability high on the agenda of banks and bankers. And by all means, it means being the talent and leadership engine for our country. It is in the delivery of that mandate enshrined in the Chartered Institute of Bankers Act 2019, Act 991, that we are holding this thought leadership event to bring some public education and awareness to the subject areas that we've put up for today's discussion. A bit of background to today's session. At the Chartered Institute of Bankers Ghana, we run a program called Chartered Banker for Executive Leadership Program, which is a program that is targeted at people in key management positions across the various financial institutions. And so far, we have the second cohort. There are a number of models in the program, and one of those models is career reflection, where executives tell us their journeys to where they've reached, and the ethical challenges, some of the skills gap and the future of the industry that they see. In one of those conversations, I asked a very simple question. I didn't quite realize that it wasn't that simple, which is, are we sitting on crypto crisis? And what would the central bank digital currency do for us in the context of also the gold coin? I thought it was a simple question, and I got a prompting that it wasn't that simple. So Professor Tego, who fortunately is here with us today as one of our panel of experts, suggested we should have a separate thought leadership event or some kind of discussion and bring a wider awareness. So there are number of our executives who are on the program or joining us this morning. And Prof, thank you for that suggestion. That idea has translated into today's event. Before we go any further, I think it's appropriate that I introduce my panel members. I've mentioned Professor Noel Tego. He describes himself as a public intellectual, and I tend to agree. Prof, if you can hear me, just confirm so we can hear your voice. Hello, Prof. All right, sure. I see your hand is up, so I suspect you can hear us. Great. We also have with us today Na Aku Nate, who is responsible for the Ghana gold coin at Bank of Ghana. Na Aku, please confirm if you can hear me.
Yes, please, I can hear you. Good morning.
Thank you. Good morning, Na. Thank you for joining us. We are also fortunate to have the Director of Fintechs and Innovation at Bank of Ghana, Kwame Oppong. Kwame has the rather difficult task of being a regulator and an innovator at the same time. Kwame, please confirm if you can hear me.
I can hear you loud and clear. Hello, everyone.
Excellent. So once again, you're all welcome, and thank you for making the time to join us. We have close to 170 people on the call at this point in time. We do hope that we'll have more people participating in today's event, but we should make a start. Just to set this in context a bit further, we're going to put up a poll, and that poll is really asking a very simple question to all of us, which is more around our awareness of the subject area, digital currency of central bank digital currency, crypto assets, and the gold coin. And what we'll ask you to help us with is to just respond in terms of your level of awareness, and so we can start the conversation, if that's okay. So you will see a poll coming up very shortly, and then we'll get your responses. Thank you very much. So in the chat, you see a link has been posted. Please click on the link. It's menti.com. And so great. So please see the link that has been posted. If you click on that, the question is indicate your level of awareness of the following. Level of awareness. So that is the crypto assets, the gold coin, central bank digital currency. We are getting some, we hope we can get some responses from you. Great. Those who are completing this for us, thank you very much. We are beginning to see some indication of the level of awareness on the following or of the following. Great. So a few responses so far. I would encourage as many people to respond as possible. I will give us a sense of the relevance of this topic or topical areas, but also how our facilitators should pitch their presentations. So far, we have about 59 people who have completed. We have over 200 people on the call at this stage, and would encourage you to complete this for us. Please, if you go into the chat box and just click on the link that we have posted, that would help us, will help you complete. There's a link in the chat box. Great. So I believe this sets the context for us, some level of awareness at different levels. Crypto assets, certainly gold coin, and then central bank digital currency, the ECD, as we have it in our country. That sets the context for us. So on that note, I'm going to invite our very first presenter, Aku. Aku, if you can hear me, it would be great to get a sense of the gold coin and how it came about and where we are with the gold coin, what it's expected to do for us as an opportunity area, and how do we manage maybe the risks around it. I would pause and hand over to you. Please confirm if you can hear me clearly.
Yes, sir, I can hear you.
Excellent. So I'll hand over to you.
Okay.
We'll move the slides.
Sure. Thank you. Good morning, everyone. I'm here to present information on the Ghana gold coin. So the gold coin was launched in September 2024 by the central bank. Waiting for the slide. Okay, thank you. So gold coins are in two categories. You'll find gold coins in the market in two categories. There are bullion coins and numismatic coins, which are usually called commemorative coins. The bullion coins are the ones that are issued by governments or government agencies and guaranteed by them. So the Ghana gold coin falls in the bullion coin category. It is guaranteed by the Bank of Ghana and is minted from locally sourced gold. The gold coin, Mr. Jato was asking why the gold coin, why now? It was introduced as an alternative investment asset to complement what we have in our capital markets right now, which are stocks and bonds, and to broaden the depth of the financial markets in Ghana. As I previously mentioned, is minted from locally sourced gold, which are traceable and responsibly mined in sites in Ghana. So these are actually authentic Ghanaian sourced gold coins. The GGC, as we call it, has been refined to 99.99 purity. So to elaborate a bit on that, when you have gold coins, some of them are alloys. They have other metals mixed in them. The Ghana gold coin is pure gold. It is not mixed with any alloy at all. It's just pure gold, 99%, 24 karat. Next slide, please. So this is the gold coin design. Back to the previous slide, please. So the Ghana gold coin, this is the design of it. The front has the coat of arms, and then the back has the arch, the Independence Arch. The side of it is ridged to also make it distinctive. Next slide, please. So you will get your gold coin in a wooden box with a certificate of ownership, and then the groove in there is where the gold coin fits. The certificate of ownership, when we get to the verification of the gold coin, I'll speak to the QR code that you see on there on the certificate. Next slide, please. So the gold coin comes in three denominations. We have a 1 ounce coin, which is the exact value, 1 ounce of gold, and has a dimension of 34 millimeters. Then there's the half ounce coin, which is 27 millimeters in dimension, and the 1/4 ounce coin, which is 22 millimeters in dimension. So we offer these different sizes. Back to the slide, please. Back to the previous slide, please. We offer these different sizes to match different investor appetite. So the 1 ounce coin clearly will be more expensive than the half ounce or the 1/4 ounce. Next slide, please. So how would you know if somebody were to give you a gold coin, a Ghana gold coin, how would you know that it's authentic? So the first thing is on the face of the gold coin, we have an embedded security feature. We have an embedded security feature which can be determined using the VeriScan security app. So with the VeriScan security app, which is only available on iPhone, sorry, they are still working on the Android portion. You would scan your coin and then scan the QR code on your certificate. Sorry about that. Scan your coin on the certificate, and you follow the steps on the app, and you'll be able to verify whether or not you have an authentic coin. So what if you don't have the Veriscan app? How can you tell that you have an authentic Ghana gold coin? Well, pure gold, and as I mentioned, the Ghana gold coin is 99% pure gold. Pure gold is not magnetic. So another way of determining whether or not you have an authentic piece is to use a strong magnet and try and lift your coin by it. If the coin reacts and can be picked up by the magnet, then you don't have an authentic gold coin. And also, the gold is a very dense, a third way of determining whether or not you have an authentic gold coin. Gold is a very dense metal. So when you have 1 ounce gold versus 1 ounce of another metal, the size will be much larger for the other metal than it will be for gold. So in terms of gold, as I mentioned earlier, the dimensions of the various gold coins. So if you have a 1 ounce, you expect to have it as a 34 millimeter. And when you hold it, it should be much heavier than another piece of metal that is 34 millimeters. And the appearance of the gold coin, you would see the design, the unique design, and the engraving of the coat of arms in the front, the Independence Arch on the back, and the ridged edge on the side. We also should be able to help you identify that you have an authentic coin. Next slide, please. So the gold price, how do we determine the price? Every morning by 9 o'clock, we publish that day's gold price on the Bank of Ghana website. The pricing is based on the LBMA price, PM auction price, and that previous day's excuse me, and that previous day's Bloomberg mid rate for the USD GHS exchange rate. So the gold coin, we are selling the gold coin to Ghanaian investors to ensure that they also participate in the success of the domestic gold purchase program. And this is to ensure that if individuals have cedis, they're able to use the cedis to buy gold instead of chasing the dollar. And that translates into Ghana ensuring that we have a stable currency. So the gold coin is sold in cedis. That is why we care about the Bloomberg mid-rate exchange rate at the close of the previous day to determine the price of the gold coin for any particular day. So to the right of the slide, I have an example here for the gold price that was published for March 21st, 2025. So on the bottom, you would see the LBMA PM price for the previous day was $3,000, $3,038.15 per ounce of gold. And the Bloomberg regional USD exchange rate was 15.5 cedis to $1. So based on that, and also additional charges that we incorporate into the price for the packaging, logistics, transport, and minting of the coin, we the price on March 21st for a 1 ounce coin was 48,965 and 61 cents. The half ounce was 24,897, and the quarter ounce was 12,894 and 17 cents. Next slide, please. So how to purchase/redeem your Ghana gold coin. The Ghana gold coin is currently available for sale only to residents of Ghana. And you can find the Ghana gold coin at commercial banks. There is no limit to the number of coins you can buy, but you will have to verify your identity based on AML requirements. So your Ghana card will be necessary, and you also will need to have that sufficient funds in your account at the bank to be able to purchase the coin. So based on the applicable quoted prices for that day, you will place your order with your commercial bank. Settlement is 2 days after you place your request, because the bank will have to come to Bank of Ghana and retrieve your coins for you. You can either choose to hold your coin, then that risk falls with you because coins are also like having your CD notes in your wallet. So should you choose to keep the coins yourself, you stand the risk of theft, you stand the risk of losing them, you stand the risk of damage. Alternatively, you could leave your coins with your bank for safekeeping. The banks that do not have safekeeping facilities at their branches would then bring the coins to Bank of Ghana for them to be stored on your behalf. So you hold your coin, you want to redeem it, what do? You can go to the bank where you purchased your coin, present your coin for redemption. The price for that day is the price that will be applicable. The same way as you purchased your coin, it will take 2 days for you to get a credit for the coin you purchased or you redeemed. As I already mentioned, you have the option to keep your coin or to deposit it at your bank. Next slide, please. Why invest in the Ghana gold coin? Gold coins have been known, or gold has been known to be a store of value. So many people fall back to gold in times of uncertainty. So as we're currently experiencing in the global geopolitical arena, a lot of people have chosen to be buying gold, and because of that, we've seen astronomical levels of price change for gold. Year to date, just the first quarter of 2025, gold prices have increased by 15.15% as of last Monday. Gold also is an excellent way of diversifying your portfolio. So right now in Ghana, I believe the only security available, apart from others issued by commercial entities, are stocks and T-bills. So should you have excess funds, gold would be a good way to diversify your portfolio and also enhance your long-term returns. Gold has proven itself over time, according to the World Gold Council, to outperform most investment assets with an average return rate of about 8% per year over the last 30 years. And also, gold is a good store of value. It does not pay interest, but at the same time, it's able to retain its value over time. As I mentioned, that it's increased 15% this year, and also over time, on average, it's had an 8% increase in value. That would help it serve as a collateral for loans should the investor wish to use that as a collateral for any loan it's taking out. Next slide, please. That's my last slide. I will stand by for any questions you may have. Thank you.
Thank you so much, Na Aku, for giving us that insight into the Ghana gold coin. Fairly straight to the point. I'm sure people will have questions. We'll come back to a session on that. But I like the idea around portfolio diversification and certainly the intrinsic value that gold holds. So Naku, thank you. Thank you very much for
You're
your
welcome, sir.
presentation.
Thank you.
Great. So we'll go to Kwame Yopon on crypto assets and the central bank digital currencies. As we said, I see a hand is up, but like I indicated, I've seen your hand, Ignatius, I believe, Ignatius. We'll come to a session on Q&A, and then you can have the opportunity to ask your question. Betty, I've seen your hand as well, so we'll come to you pretty shortly. Great. Kwame, if you can hear me, I would welcome you to share your initial thoughts, and then of course your presentation is being put up as well. Kwame, please.
Thank you. Good morning, everyone. I'm going to take you through two interesting concepts, which, per the quick survey that was done, many of you are somewhat familiar with. And I believe the discussion will be exploring the dimensions that we thus far have not had a chance to explore. And so, for starters, let's start with the cryptocurrencies as they predate the central bank digital currency concept. But I should mention though that the central bank digital currencies are a concept that is not relatively new. They have their history going back much earlier into the 2012, 2010 timeframe. So digital assets are pretty much items of value in a digital form. So they could be owned or controlled by an individual or entity. They could be virtual assets. So, you have your Bitcoins and similar assets. Then you have the tokenized assets, such as the called RWA, so the real world assets. So in fact, something like gold, you could tokenize gold and you have a representation of it. You could take any asset and you could tokenize that as well. You can look at that type of tokenization almost like creating a digital twin equivalent or serializing an asset and creating a token that represents ownership of that asset. That's an example. And then you also have digital documents, media, and other collectibles like NFTs. In case you've heard of NFTs, these non-fungible tokens, pictures of shoes, pictures of cats, all kinds of things that people are into. But even, they have even those have real life applications, such as for the creative industry being able to protect artwork so that we know who a piece of art belongs to at any point in time. Now, these assets can be stored, transferred, and traded digitally with a value based on usage, scarcity, or reference to an asset ownership. And I highlight this to bring some context to how the intrinsic, the underlying value of these assets are determined, right? So if you look at Bitcoin, there's a scarcity of Bitcoin similar to gold, and its scarcity determining its price. When you look at stable coins, for instance, so while normal cryptocurrencies, the value is based on demand and supply. For stable coins, for instance, they could be pegged to a basket of assets, in which case, or even to a currency, in which case, whatever the value of the dollar is, a dollar peg stablecoin has the same value as well in your local currency. Cryptocurrency is a digital representation of value typically issued and maintained on a blockchain. It is not legal tender, I should mention, but is used in payments, trading, investment, quasi-banking activities, many of which are now coming up, called decentralized finance, or short form DeFi. It uses distributed and decentralized systems, and blockchain creates and verify records of transactions. They can be purchased through exchanges, and they can be traded in those exchanges as well. Next slide. So typically, and I'll put this in context. So the type of CBDC we have here is programmable money, which isn't quite considered the traditional central bank digital currency. So this is similar to the Singaporean PBM, purpose-bound money, which is not in itself a currency, but it has a currency orchestration around it to basically define and govern the use of that asset. So you can actually use a stable coin and wrap that programmability function around it that is provided by some central banks. But generally, these assets are around cryptocurrencies, virtual assets, stable coins, tokenized assets, NFTs, which we talked about earlier. Next slide. I think I'll skip this or maybe touch on this a little bit, but blockchain is built on the foundational idea in computing called the Byzantine generals problem, right? And that's what created what you see called a BFT, Byzantine fault tolerance. It's on the basic principle that if all the functions or the components, the logical components of a computing program are acting as expected, you should have a successful outcome. When there's any misalignment or malfunction, or let's even say an inconsistency in the instruction across all the various functional components, you wind up with an undesirable outcome. And this description of a Byzantine general's problem has been used to describe that idea, where if a Byzantine fort is being, there's an attack on a fort or a castle, when all the different, let's call them army regiments, have the same clear instructions to attack, you're likely to have success, which is to be able to overcome the castle. Whereas on the other side, if there's any misalignment where some companies within the broader army have either the wrong information or are unaware that the instruction or the marching orders is to attack, when they retreat, you have insufficient attack capability to be able to overpower the castle. So it's built around that idea of consistency and functional alignment. Next slide. So just a quick overview on the blockchain, and it's important that I highlight this blockchain matter because it is foundational to many of the things you come across in the cryptocurrency world. But it's really decentralized, distributed legal digital ledgers that records transactions across multiple computers. So imagine we all have access to the same computing programs. We're all parties. We have access to that program. We're all storing, secured and encrypted copies of data. Just from a structural perspective, it is not easy for you to destroy or to alter that information, because if you manage to alter all the computers in Ghana, the copies on there, well, there'll be other computers around the world that have the correct copy, and a validation process will review that. The structure as well is quite simple. Data is still stored in blocks. Data is stored in the blocks, and those blocks are linked together. So imagine it this way. There's a first block which has information on it, and that information could be a transaction that occurred. Let's say Kwame Opong received 100 cedis. Now, if I spend 10 out of the 100 cedis, a new block is created that has information linking to the old block and the updates to my balance reflecting in this new one. So based on your access to the current block, you can actually track and see where the previous transaction came from, or the previous activity was, or which previous block it came from. And that can help you actually trace yourself all the way back to what is called the Genesis block, which is the first block that is created. This is important. So if you go into the block, typically there are several data points. So you have the block header, and whatever the information is, you have at least a couple of key points in there. So the timestamp of the transaction, you have the nonce value, you have the you have timestamp, nonce value, you have the previous hash of the previous block and things like that. That gives you, and then the current hash as well. So it gives you sort of key data points that allows you to understand the history of the block itself, where it's coming from, and the details around it. And you have things like something like the nonce value is very important in particular when it comes to cryptos such as blockchain, and when it comes to mining particularly. And then timestamp and everything else also gives you a sense of which precedes which is very important. I'll highlight this important for the reason that there were previous implementations of something similar called the Kerry protocol, for instance. It recorded events, but those events were sort of not time-stamped and structured in a way that you could sequence them to be able to tell whether, what happened before what. So for the blockchain concepts, in addition to everything else, its core interesting feature is the fact that it maps this all out sequentially, and that's how sometimes we say it's pseudo-anonymous, because if you can actually work your way back and track information within the blockchain, it's just difficult, tedious, and often requires a lot more resource to do. The decentralization dimension is very important. It has no central authority that is running it. So that blockchain basically is validated by a network of computer nodes, nodes on the ledger, on the whole network. And these are the systems that are validating the legitimacy of a transaction, for instance. It's also immutable, as I described earlier. You can't, once it's recorded, you cannot delete it, you cannot alter it, you cannot do anything. So it ensures that it has high integrity, and that's why there's advocacy for it being used in environments of trusts, where there's a trust deficit. It's been suggested as a good application for things like election voting and all these other dimensions. And I should mention that this is why it's also called this is a trustless environment. The whole idea is to be able to use it in a place where the transparency and the immutability and the decentralization, all of that positions it as technology that doesn't require you to trust the counterparty, because whatever it is that we put together, you cannot change it. Next slide. Okay, so I'm sure you've heard of Bitcoin. This is just a quick overview of it, but really it's a type of crypto assets. It relies on the concept called proof of work, which is a consensus algorithm for validating transactions. So the computer programs are calculating mathematical quizzes, if you put it you can put it that way, mathematical problems. So as it solves the problems and it gets a correct response, then it validates the transaction. And typically there's some small crypto that is given to who processed it. The next slide. Another one is called Ethereum. So next slide. Another crypto is called Ethereum. Ethereum was introduced back in 2013 by a Canadian programmer called Vitalik Buterin. When he issued a paper called Ethereum White Paper. I should mention Vitalik was actually here in Ghana at some point, engaging key stakeholders. He engaged with the central bank as well, so we could get a deep sense of what their motivation is, what the direction is. And I would say it was a very, very enlightening interaction, to put it mildly. In 2014, the development of Ethereum platform announced 18.4 million raised through an ICO. This is the equivalent of an IPO, initial public offering. This is an initial coin offering, which is typically how the coins raise money when they start. In 2015, Ethereum network launched with 72 Ethereum coins, ethers, and currently it's somewhere hovering around billions and billions of dollars. Subsequently, there was also decentralized autonomous organizations that were built to demonstrate how an organization can fully operate on a blockchain. Now, this idea is very simple. Think of it as a decentralized way of running a company, right? Decentralized way of running a company and governing the operation of a company. So instead of having a board of directors, you have this DAO where members of the DAO are able to determine the direction, strategic direction, and even operationally as well of the organization. Next slide. So tokens are classified in this manner, right? So what is the best use or purpose? Because tokens don't necessarily have to be one of these categories. There's equity tokens, which represents equity in underlying assets. So let's say I have a company. I could issue tokens just like you can issue shares. I can issue tokens in this company and you can own part of that. And once you buy into, buy any of these tokens, it's recorded on the blockchain and your ownership is validated right there. Secondly, you also have utility tokens, which is also used to raise capital often, but it's really a means of accessing a product. So for instance, rather than give you, and you can think of the loyalty that in the banking community, the loyalty products that you offer your customers. You can actually, for instance, give, you see these airlines give free tickets, maybe Accra, London, Accra. You can actually give someone a digital token that entitles them to an economy seats on Accra, London, Accra flight, for instance. And you can offer, a hotel can offer one night stay, and rather than give you a paper voucher, they can give you something like that. So you can think of it as basic level in this manner. And then you have some intrinsic tokens as well. So these are native and built-in tokens that have intrinsic value, right? And it's often based on market sentiment as well. So Bitcoin and Ethereum that I described earlier are built on this idea. The asset-backed tokens as well are another category. So this would be, I described the gold version of this, for instance. So you can create tokens for gold, tokens for crude oil, soybeans, frankly, anything. You can back them with that. And then there's also an interesting one that is not here, but I'll highlight, called the entity attestation token. For many of you who heard of the idea of in this emerging world, you hear Internet of Things, IOM. One of the interesting dimensions is that IoT, sorry, the IoT concept is basically further enhanced by the fact that for all those independent devices you may have in your home, your fridge, your robot vacuum cleaner, all those elements, tablets, on your network, these are looked at as independent devices. So in fact, the telecom companies often, well, in the past used to look at average revenue per user. I think at some point they have started pivoting to also explore average revenue per device, right? So they try to push you to do a lot more digital and digitize and live smart in a smart home environment and more smart activities. The more the devices, the more the usage, and of course, it's good business for them. But in this case as well, this is enhanced by the fact that the entity attestation token actually validates that this is who this item is, this device is, and these are the credentials pertaining to that device. And basically, you can consider it almost like if it were driving, that would be the driver's license for that device. So when it is captured in any type of activity, you can know what it is, what it's used for, how it can function, and all of that. Next slide. So we'll just walk through some quick global trends. Next slide. Suffice to say, the crypto market and the market capitalization has grown quite significantly since the early days. Bitcoin was created sometime in the late 2000s. In fact, it started off in the late 90s as a agitation by the crypto anarchists who really just had a problem with the idea of central banks because of our ability to implement monetary policy. They have a very different view about it, and so they wanted a different kind of money. And that's what wound up in the launch of Satoshi Nakamoto's Bitcoin papers. And since then, we have seen Bitcoin rise and many of these tokens launched and risen quite significantly. If you look at the market capitalization, things heated up somewhere around the 2021 with a lot, I think hit the highs around that time. Then you have the collapse of FTX quite visibly. Before that was a Terra Luna incident. And then Silicon Valley Bank also collapsing somewhere in the 2022, late 2020, early 2023. And then Bitcoin spot ETF being approved by the SEC in the US saw things picking up again. And of course, with the recent election of the US president who's committed to cryptocurrency, we see a significant spike. Stablecoin market capitalization has been quite interesting though. Because of its stability, we're seeing a lot of institutions in large global and capital markets using them for settlement of transactions. So banks or commercial banks in the US and many developed markets are actually permitted to use stable coins to process transactions, and they have found significant use in there. In fact, some of them have built their own blockchain, private blockchains, and are issuing stable coin or stable type coins for various purposes, including even tokenizing deposits. So your deposit can be tokenized and given to you, and it allows you to be able to demonstrate or present it for various activities in your financial dealings. Next slide. So despite these failures, crypto assets continue to evolve. Next slide. We are not seeing it dipping at any point in time. It continues to grow. Sub-Saharan Africa is no exemption to this. When you look at Nigeria, somewhere between July 2022 and June 2023, Nigeria had a significant activity in the cryptocurrency area. Now, this would also match quite closely, as you would notice, with the currency volatility at the time. And so Nigeria, South Africa, Kenya, Mauritius, and Ghana are basically in the top 5 in Africa when it comes to cryptocurrency usage. And this is very important and has a significant implication on us as regulators and policymakers and on you as bankers. Next slide. So we do have a growing crypto markets in terms of our landscape in Ghana. It's growing quite significantly because obviously we have high mobile penetration, but also we have a lot, we're a high youthful population who really understand this type of assets. And it gets even more interesting. The children who are coming up, I think the Generation Alpha, for them, virtual assets are a natural existence because the tools and games that they are playing today often requires virtual tokens of some sort. So I'm sure as parents, some of you are paying for PKXD tokens and the other one, Roblox, the the virtual funds for Roblox called Robux. All of that is something that those kids are growing up with. So it's very intuitive for them. The rising adoption largely of retail-based transactions is being used for that quite a bit. Remittances, savings, investments, peer-to-peer are all showing up as use cases in there. The most widely adopted digital asset is Bitcoin, and then stable coins, particularly USDT. The key platforms in the country that we see people using a lot, Binance, Quedax, Coinbase, and Bitseeker. And some emerging companies called BitNob, Mazuma, and a few others. Next slide. Sorry, next. So there are risks, obviously concerns around cyber risks, and particularly for the third-party interactions, the reputational risks. FX losses by some banks in 2022 was an example of that. The regulatory risks are also very clear because it begins to circumvent. Because of the pseudo-anonymity, it introduces an opportunity for individuals, businesses, and illicit actors in general to try to circumvent regulatory provisions. It can be a conduit for money laundering and terrorism financing, as we saw with Al-Shabaab. We've seen it with Hezbollah and all the other cases that have been reported. There are also some market risks that are very important to identify. There's a fee income issue involved. There's a loss of market share. Sorry, that's a typo. A loss of market share also involved, and the strategic and business sustainability risk as well. It actually can be a source of disintermediation for commercial banks, and especially for things like DeFi. It's an area that I've taken a particular interest in because it promises as much of positive outcomes as it does in negative disruption. And when I highlighted the Gen Alpha folks, the latter batch, the latter cohort of Gen Zs look at these issues this way. You can either go to a bank or you could be your own bank. For them, the idea of giving money to an entity and then paying, for instance, some kind of account management fee is so foreign and complex for them.
Okay, so Kwame, I'm not sure if you can hear me. I can't hear you. It appears we've lost Kwame. I'll give him a few minutes to rejoin. I'll try and reach out. Thank you. All right, so we're waiting for Kwame to rejoin. We see quite a number of questions coming through. Just to assure you that we'll have these questions responded to in a short while. And so be patient with us. And I think the excitement or the interest, I should say, the interest in this topical area is quite high. And so thank you for joining. We have over 390 people on the call, 440. So that keeps rising. It shows the significant interest in this area. Kwame, please confirm if we are back. Okay, great.
Yes.
I'll hand over to you, Kwame.
Thank you. Next slide,
Cheers.
please. Okay, so one of the challenges that we're confronted with from a regulatory and policy standpoint is how you deal with the issue of crypto. We've put out a draft framework on this subject, and we're hoping we've already gotten some very good feedback and input from stakeholders more broadly, and hopefully as the Chartered Institute of Bankers, you'd also, as members and perhaps even as an organization, you may be able to share some feedback with us as well. It's on the BOG website, because we are at a point where one way or the other, there has to be a comment on the issue of cryptocurrencies and digital assets beyond the fact that they are not regulated, because it's already seeming to seep into a fabric of our society, and it's important we have comment on it. So one, having an enhanced risk management framework. Two, strengthening the AML and KYC practices to be able to monitor suspicious transactions even more. Partnerships and vendor risk management. This is very important as a control measure. Innovation and tech adaptation. This is an area that we're trying to use our sandbox to help guide the path of innovation so that it adopts some of the key elements and principles for safe financial transactions. For instance, in the case of cross-border payments, elements such as travel rules and the rest will be embedded in the usage of these digital assets. Engaging with regulators and industry is very important, so an engagement between stakeholders in that manner, but also exploring use cases for trade finance, enhancing transparency and cross-border payments. These are all very important as controlled measures. This is why on our side as Bank of Ghana last year, we actually conducted, well, over the last few years, we've been doing quite a bit of work, some of which has been public, others have not been, but we've done things such as acquire the tools to help us track, identify, and get reporting on crypto activities here in Ghana and actually broadly on the continent. And then we ourselves have also been doing different experimentation, including the one that we made public, which was the cross-border payments between Ghana and Singapore using a stablecoin from Singapore and a CBDC, Ghana's e-cedi. The regulatory landscape has advanced quite a bit since our initial positions. But if you look at FSB, the Financial Stability Board, BCBS, FATF, and IOSCO, I think it's become clear that the expectation is that we collaborate as an industry, we embark on sandbox type pilot programs, but most importantly, we find a structured way of addressing the issue of crypto one way or the other. Prohibition has proven futile, because as I say, if a country like China has not been successful with outright prohibition and successfully, so then we need to be mindful about our aspirations when it comes to outright prohibition. And so it's about how do you manage the risks and control it and determining how to address it within your framework. Next slide. Oops, sorry, next slide. Okay, so this is a bit of our journey. We came with the initial position of cryptos being banned. Well, this is Nigeria as well, right? So cryptos being banned, and then Ghana also prohibits PSPs and everyone from touching it, banks and everyone else from touching it. But slowly we saw Nigeria implement a temporary licensing regime, CBN reverses its position. BOG also starts a framework, intention to establish a regulatory framework for these activities, and subsequently we've put out an exposure draft. Next slide. So the challenges really around it, and often when you meet the crypto aficionados, they are very quick to simplify the issue of dealing with cryptocurrency. I think if you're a regulator, such as myself, and you're also an innovation person such as myself, it's one of the most conflicting challenges to confront. Because beyond the lack of legal and regulatory clarity, don't forget, these tokens are being created by the day, and the kind of innovation that is happening there is at breakneck speed. And so if you're not careful, even the policies that you're developing become somewhat invalid and somewhat as ineffective as can be before you're even done formalizing it. So it's an area to consider, and it sort of informs how you build a framework. The macroeconomic environment also has an implication on it. The pseudonymity of the crypto transactions, especially the P2P platforms, where people can bring their own tokens online in exchange. It doesn't give an avenue for independent or centralized party to be able to record the transactions, do KYC on the individuals, and be able to at least give some visibility as to who's doing what. So that's always a concern. Public perception and awareness is also a challenge to deal with. In the early days of cryptocurrency popularity in Ghana, the majority of people that I met who said they're involved in cryptocurrency or they bought cryptocurrency did not actually buy and hold cryptocurrency. They were dealing with third parties and multi-level marketing schemes, which were claiming to be investing in cryptocurrency. And so by extension, these individuals also thought they were invested in cryptocurrency. And that's a concern. And of course, lack of institutional capacity. This is not just even at the central banking level. It's across our banking sector, law enforcement, and generally as a society. I think the high level awareness may be there, but a depth of appreciation to make sure that if you showed up right now with a dispute to a police station, how is it going to be addressed by the investigators? When a case is proceeding to court or proceeds to court, how does a judge address it? So there's an all of government approach that is required. And frankly, all of society approach that is required to put cryptocurrency in the right context within markets such as ours. Next slide. Okay, no, sorry, there's a previous document. It should have something on CBDC. Maybe Robert, if you can pull that up so I can quickly run through CBDC in the next 8 minutes. Alternatively, I can share from my screen if that's okay.
Sure, Kwame, if you don't mind.
So hopefully you can all see my screen. Let me hide this. All right.
Yes, Kwame, we can.
Okay. So
Great.
Central bank digital currencies and the history in Ghana is quite simple. We, at some point, upon seeing where everything is moving and our own efforts as a country to digitize our economy, if you look back all the way to around 2007, 8, coming from the early days of mobile money, and even prior to that, the attempts to have an effective retail payment ecosystem was there, and there were the early foundations of that. It continued to expedite, in the early 2010s to 14, and by 2015 we had formalized the mobile money regulation as a central bank, and then subsequently there were other advances that have brought us here today. So our attempt to digitize our economy has been happening over a long time. The interesting thing is, for us as a central bank, what does this mean? What is our future role as a central bank in an environment where we have successfully digitized the economy? We'll still be providing currency in a physical form, which is the source of the inefficiency, which is where the challenges come from. And so in 2019, there was an announcement to pilot CBDC in Ghana. And between that and 2022, a tremendous amount of work went into understanding the concept, examining it further, reassessing some of our assumptions. And by 2022, we're in the field testing CBDC. And our objective was to drive financial inclusion, spare competition in the payment system, strengthen our policy transmission channel, and also advance financial stability and reduce the cost of payment. I should mention that it was particularly important to us to make sure that we had offline and online for CBDC, so that users, whether they were connected or unconnected, could use it, because that's how money should work. A CBDC is really a tokenized and digital representation of sovereign currency. And this is important to be able to distinguish it from the cryptocurrencies. CBDCs are dematerialized version of currency notes and coins, which means it is issued by the central bank or a monetary authority or whatever institution it is in your jurisdiction that is given that mandate by the constitution or by the government. It's similar to notes and coins as it serves as a medium of exchange. It can be a store of value, and it is always a liability of the central bank. They are used for both wholesale and resale activities, and I'll highlight the distinction. From a wholesale perspective, this would be in the context of RTGS transactions, right? So imagine every one of the banks having access to CBDC. So we use it for interbank settlement. So typically the wholesale CBDC is called RTGS money, and it makes it that simple to understand. So you can have that mental picture. This, in our examination and assessment, was relatively straightforward in the sense that the complexity was how it is adopted by nearly 20 million adult Ghanaians, probably even more than that. The challenge of this compared to the wholesale is wholesale, you're dealing with 23 banks and microfinance and a few other companies. But at an RTGS level, it's the 23 banks and ourselves. So it's a much easier conversation than the retail part. So what we wanted to understand is for a retail or general purpose CBDC, which is used by individuals to pay for and businesses to pay for things or exchange amongst themselves, how do we assess whether it is feasible for people to adopt it or not? And so CBDCs in the general purpose category come in two types, the account-based or the value or token-based. The account-based one has a very interesting dimension. And this is very important, particularly since you're all bankers, that you understand this distinction. An account-based CBDC is a model where, for us as a central bank, we will create accounts for every individual. So the funds will actually sit with us. So when the individual wants to spend, you as a bank then are able to, they sign up with you. You're responsible for their customer onboarding and all the other requirements. You give them channels with which they can spend, but the funds sit with us. It's almost the equivalent of what some of these small fintechs do, right? They have an app, but really the transactions are being pulled from a bank account or mobile money wallet. That's that kind of implementation, but it means the deposits don't come to you or it's not within your ecosystem directly. The value-based or token-based CBDC is different in the sense that when those tokens are issued, just like currency is issued today, and you can exchange and take some and go away, you are the ones who hold those tokens. It's still a liability of the central bank as a token, right? It's issued. It's not just a ledger balance that we record. It's an actual token with its own serial number of some sort, just like a physical paper currency would. So this is an important distinction because the funds are moved to commercial banks and then cascaded to the rest of the ecosystem. So they are issued as independent notes. We call them value notes. Okay. So this is effectively describing what Ghana was doing. So we chose a retail-based CBDC and a token-based version. So that's what the CBDC implementation Ghana did was. Now I want to highlight 4 key pillars that governed our CBDC. From a governance perspective, we wanted to make sure BOG is the issuer, as we should be. Commercial banks are in charge of wholesale distribution, as you do today. And I want to highlight, this is not retail distribution like your mobile money agents or agency banking agents. This is speaking specifically to the role that commercial banks play today in taking currency notes and coins from us to the ecosystem. Fintechs and banks as well are authorized to provide wallets and services. We ensure transparency to mitigate money laundering in the ECD, and there's holistic monitoring of the ecosystem. Again, privacy concerns here are addressed because we don't care what Kwame Opong did, what transaction he did at 2 a.m., for instance. What we care about is at an aggregate level, where are transactions flowing from? Is there any risk we should be concerned about? Things like that. Inclusiveness. It needs to be accessible to anyone, trusted by everyone, and that's the idea. It should be legal tender. It should work effectively both online and offline. China was the one who was, China was famed to be doing the CBDC pilot, which was looking at offline transactions. But it turned out subsequently, after the results came out and the information became somewhat public, that China was testing a scenario where I can be offline, but you would have to be online. What we tested in Ghana is both you and I are offline and we can still transact. And we tested this in Seria Safo. It also should be cost efficient to consumers and merchants. And again, CBDC in Ghana is positioned as an enabler of the ecosystem. For that reason, it is the banks, the fintechs, financial institutions, financial sector actors who are actually going to provide their own services that runs on CBDC. It's really like doing what you do today, except instead of using physical cash, depositing it in and doing all kinds of transactions, you can directly run it off the CBDC architecture. And then it needs to be interoperable with existing payment systems, and then also be programmable and compatible with future architecture. So our API structure to make sure it can be integrated into any future policy, at a global level was very important and embedded in there. And of course, the infrastructure. One of the most important aspects of this whole four-legged pillar structure. The infrastructure has to be the highest security requirements. It has to support high transaction volumes, and it also has to be very resilient and available, and payments have to be instant to achieve our objective. So this is just a bit of an update on what has been happening around the world. There are more projects ongoing now. These are some of the devices with which you can spend CBDC. If you're spending online, it's no different from what you do today. So experientially, you may even wonder, but what's the feel? What's the difference between CBDC and my normal digital banking app? Good. The goal is not for you to get a different experience in terms of the user journey, right? Or the user experience. It shouldn't be different. There's no value in creating a different user experience. It's the back end that changes. So I often liken this into driving your normal combustion engine car, the normal petrol engine car, versus driving an electric engine motor-powered car. It still has a steering wheel, still has some kind of gear system to move forward, to move backwards, and perhaps to park. But the main difference is in the engine, right? Or what motor is driving it. So the online experience, same. Offline as well will be the same, except with offline, there's a lot more, there's contact required of some sort for this to be successful. So these are some of the devices that you can use to test and use CBDC. And this is the type that we used in the pilots. So this is a very simple use case for online. You go to your bank or service provider, they do KYC on you. You top up your account or your wallet by just having, and by the way, so this is, as you can see, it comes from a bank or financial service provider of some sort, right? A duly licensed entity. You top up and then you can spend. For online, you can send it using your app, make payments, everything very normal. And it can be redeemed into physical cedi if you so choose. And then in the case of offline, once you're onboarded, the interaction would have to be in person. So this offline CBDC use case is the closest experience to physical cash. People will say, oh, wait, but if I can do offline, then what's the point for, mobile banking apps and mobile money and the rest? No, you have to be in front of me for us to be able to transact, where we are either putting it in a device or we are doing NFC type touch, tap and pay type activities. So we need to be in proximity for us to be able to transact. If you're transacting over a distance, that has its implications. But even with this, the devices that are provided either for storing and the devices provided for facilitating, like the POSs, those are all things that financial service providers have to provide so that customers and businesses, individuals and businesses, can utilize CBDC. Here are some of the features and benefits. Being issued electronically means it reduces our cost of operations. It's a more effective means of settlement. Being traceable and visible means it improves fraud monitoring, enhances KYC compliance, and enables real-time monitoring. And then offline usage means it enables remote payments, especially for those who live in the smallholder farming type environments in the rural agricultural ecosystems. And then being interoperable means it enhances our current scope of payments interoperability and enables use cases that increase competition. There are risks to CBDC, which we looked at very carefully. Impact on bank deposits is one. And in this case, even our choice of going the value-based instead of the account-based was one such decision. Also, introducing transaction limits, such as we have with mobile money, is a way of managing that risk of deposits for banks. There's also the impact on monetary policy and financial stability. So some of the measures I mentioned in terms of the transaction limits and some controls around recognizing the fact that if I give the average person 100 million in cash, they are not going to carry it and walk around this town or anywhere. But if you gave them 100 million in cash, 100 million on a small device, say their phone, their watch, a key fob, they will comfortably walk around this world with that and just be sure to guard whatever the device is. So there are studies that have shown that inherently people treat electronic cash or electronic money very different from physical cash. And that's how the credit card industry has grown to where it is today. Cybersecurity risks are also something that we looked at. So we have layers and layers of cybersecurity risk mitigation measures, including a verifier network that on top of all the cryptography in the tokens themselves and all the other measures we've put in place, there's a verifier network that validates the authenticity of every single token that is coming through the online transactions. Money laundering and terrorism financing have also been accounted for, but it's a risk that we took some note of. And then, of course, barriers to consumer uptake is a reason why we conducted the study. We conducted a whole consumer understanding study, which included a baseline survey, focus group discussions, and an endline survey. And even after that, we also had an independent institution come and conduct a financial inclusion diary study to get deeper insights to some of the results that we got in the CBDC pilot. So this is just a small eye chart to help you distinguish the difference between CBDC and cash. The one big difference is the traceability and the ability to do online payments. You cannot use cash for online payments, but you can use CBDC directly for online payment. So it's really a digital version of cash. Of course, the potential benefits for stakeholders, promoting financial inclusion, competition in payment system, as I mentioned, transparency, financial stability, because in this case, in the era where there's so many crypto tokens being issued and people are being abused only because they want a more effective way of conducting, let's say, cross-border transactions, and they gravitate towards it, perhaps providing people with a safe alternative guaranteed by the central bank makes a lot of sense. And of course, reducing the cost of payments, which benefits consumers as well. Choices and competition will be clearly a benefit that we should get. Being interoperable means anyone, anywhere can use it. You don't have to feel restricted based on the service provider you're using or what bank you're with. It's compatible anywhere you go. And accessing digital payments at the last mile becomes a true reality, finally. And then, of course, the efficiency gains for the entire financial sector with a digital form of cash is expected to lower cost of service delivery. So this is on CBDC as well. At this point, I'll take a pause and ask if there are any questions. I'll turn it over to you, Robert.
Thank you, Kwame. This is really insightful, certainly educative and informative. So thank you. I see a number of hands or questions that have come through much earlier, but let me indicate that we can allow you to unmute and then ask your questions. In the meantime, I see Betty Aye. Your hand has been up for a while. I saw Ignatius earlier. I do have, like I mentioned, Professor Noel Tegu, who is a faculty member on our Chartered Banker for Executive Leadership Program here as well. He will pick some of the questions and situate them in the context and concept and some of the things that he sees globally as well. So, Prof, thank you for being here with us. I'll give the first opportunity to Betty. Betty, if you can hear me, please, you have the opportunity to ask your questions or pass your comment.
Thank you, CEO. Thank you very much. On the gold coin market, I want to know how BOG will keep black marketing. Because with this galamuse and small-scale mining, gold is in the hands of the public, and we have the goldsmiths around. They can make copies of the gold coin. And if we are not careful, value will start dropping if the coin gets on the market. So I want to know how BOG will keep that aspect of the market. Thank you, Robert.
Thank you so much, Betty. I will take a few more questions and then we can congregate them and get some responses. So if there is another question, I believe from Ignatius, Shaibu, please.
Thank you very much, CEO, and good morning to everybody. So I have basically two questions. So number one, particularly on the central bank digital currency, the presenter made the point that the deposit will not be, or the value of the digital currency will not be sitting with universal banks, but rather it will be sitting with the central bank. From the perspective of the business that we do, in other words, we trade money. What is the value for us if, for example, it will not be sitting with us such that we can use it for financial intermediation? Question number two, the presentation on Bitcoin and there are others. My problem with Bitcoin in particular is because of the high volatility for the Bitcoin. And from the mandate of the central bank, which is to ensure stability, price stability, how do we reconcile the need for price stability to the very volatile nature of the Bitcoin that can go from low to high? In particular, given the fact that Bank of Ghana is supposed to ensure that the interest of the ordinary Ghanaian is, protected such that there is preservation of wealth in the country. Thank you.
Thank you very much, Shaibu. I'll take Ignatius and then we can have some responses. Ignatius, please.
Okay, thank you. Thank you, CEO. Yes, I wanted to know from them, since they are coming from the regulation sector, how different is the Ghana gold coin from the NAM1 thing, what NAM1 was running in the system? How different is the gold coin from NAM1's gold when he was selling on the market? Thank you.
So I would go to Aku. I'm sure you've heard the questions from Betty. Was more on how do we keep the illicit side of things, or the counterfeiting of the galamsey, and then she situates it in the galamsey. The second is, how different is this from what we have seen in the market in terms of NAM1? And then we'll come to Kwame.
Okay, thank you, CEO. To answer Betty's question, the authentic Ghana gold coin has an inscription on it that enables any holder to determine whether it's genuine by using the VeriScan app. So that is a way of ensuring that we don't have imitation. So a prospective investor will be urged to go to a bank and purchase from there instead of buying it from an unauthorized dealer. It's best to take it to the bank for verification. Or if you can verify yourself with your iPhone, then that's a good thing. But I believe that will be, and also the gold coin is in a capsule, which all of that I'm sure can be imitated. I think the proof safe way of ensuring that you're buying a genuine gold coin is to ensure that you're using the VeriScan to verify the coin. Because if it's not a genuine gold coin, the VeriScan app will not work. And for the question of the NAM1 similarity to the Ghana gold coin, I believe from my little knowledge of what NAM1 was doing, he was tokenizing the gold so that you are investing in something that you actually do not carry with you or even see. In the case of the Ghana gold coin, you can actually ask to see your gold coin if you choose to leave it in safe custody with a bank or with Bank of Ghana. Alternatively, you can take your gold coin with you. So this is tangible investment. It's not something where you are being promised that you have a gold coin somewhere And also you're dealing with the central bank. And this is not an obligation of the government. This is an obligation of Bank of Ghana itself. So I think that also should give a prospective investor some comfort.
Great, thank you.
Robert, Robert, this is Noel, please.
Great.
Just a quick one. So it's all well and good, the verification process, but massive public education is needed about the verification process so that the individuals could verify. Because if people do not know and understand the verification process as well, then cowboys can come in and then cheat them. So ongoing massive public education will be needed, not necessarily for the initial purchases, but for example, if I purchase something and I'm dead and gone and I've passed it on to someone as an inheritance, that person did not necessarily go through the verification process on my that I did on my purchase, and so that will be lost. That knowledge will be lost to the person, and so ongoing ongoing education should be one of the things that will ensure that all the lock-safe processes are actually activated so that they become useful in ensuring the security of the coin, and it's also ensuring that the black market doesn't arise and let alone flourish. Thank you.
Thank you,
Thank you,
Prof.
Kwame. Thank you, Prof. And thank you, Kwame. You have the opportunity, but before you do, I do have a question related to your area, which is, in your opinion and experience, how far away are we in terms of years from cryptocurrencies being universally accepted and not such an enigma anymore? I think that's the word. Do you foresee it ever becoming legal tender in our market, and how soon? That's from Francisca. Related to that, what is the position of Bank of Ghana in the regulation and public adoption of cryptos? And that's from Shadrach. So if you can combine the volatility question with these two in terms of response, that would be great, Kwame.
Okay, let me combine a few things. So the issue of legal tender is a very different matter, because once you declared legal tender, it means once it's offered, it should be accepted. And that's a different legal discussion. So even in markets where it's being discussed, or maybe regulations have been put through, it's not been declared legal tender, right? In essence, if I'm a shopkeeper and you show up and want to pay me with cryptocurrency, I don't have to accept it. Whereas the Ghana CD notes is legal tender. If I make a payment with that, you have to accept it. So I want to clarify that distinction. But in terms of the broader view or interest as to whether cryptocurrencies and digital assets may go mainstream and become an enigma, I'll just tell you this. That threshold has been crossed at least 2 years ago. And I'm telling you this as openly as possible. It was crossed at least 2 years ago. The question now is how far it will go, because you're seeing what is happening in the United States government right now. Even the president, during his inauguration, issued a crypto meme coin called Trump coin, and raised hundreds of millions of dollars with it. And then his wife also did the same. Now, obviously, from a policy and regulatory perspective, there are some developments in that space that are of very high concern, but that tells you how far it's going. The second issue you can look at is in Europe. About a year and a half or two ago, they passed something called the markets in crypto assets, MiCA regulation, and have licensed an institution called Coinbase, providers of USDC, which is a stable coin pegged to the US dollar. What that means is those tokens can be used to facilitate transactions in the European markets. Asia in itself, we're seeing countries like Singapore that have already begun approving some stable coins. So they don't touch all stable coins, but there are stable coins that they approve, and they have a guideline for the usage of crypto. There are many places in this world today where people who are into digital assets, whether stable coins or crypto, are fully living and transacting with stable coins. Bitcoin and Ethereum are obviously quite popular as cryptos, but the rest, generally because they are more volatile, it is not the reliable one that people go to. And I see David has even mentioned El Salvador. El Salvador tried to make, they made Bitcoin legal tender, and they actually managed to accumulate some significant value based on the holdings that they invested in. But I understand now the IMF in their negotiation with them is trying to squeeze them a bit on that whole Bitcoin angle. Central African Republic also went that route, but generally I have been cautious not to make reference to that market. I think the context for those of us who are a bit closer to that activity, the context under which it was introduced to the market is not quite something we want to make reference to. But the important thing is, as it stands today, there are restaurants in Washington, D.C., right around the World Bank, right around the White House, even when they hadn't had this position on cryptocurrencies, where you could actually pay with Bitcoin. Now that says a lot. So Dubai, if you go to UAE, I don't know, almost every country now, when we went into our CBDC pilots and went to the university, UMAT, the young guys and girls there understood CBDC because they understood crypto. That also says a lot. So in our daily lives, and I think there's a generational gap a bit, we may not see it to be as dominant as or prevalent as it actually is. It's not quite where it's the main mode of doing transactions, not at all. By far, it's not. But it's already crossed a threshold where we can't wish it away. It's now a significant component. There were years where transactions into this country or transactions on cryptocurrency in Ghana was around $3.5 billion. So let that sink in. $3.5 billion. And that was actually a report that we generated, which was not a full year report, for instance. So that should give you a sense of the nature of activities that are going on. And this report, by the way, goes back to about 2.5 years ago. So again, another shocking statistic. To the issue of the first question about bank intermediation, I think the questioner got it the other way around. So I was saying Ghana actually chose the token-based route, which is you as commercial banks or commercial banks actually hold the tokens. So it's in your domain. The account-based model, which is what Nigeria initially implemented, and we're watching very carefully because we were confronted with similar decisions. And I should also mention that it's not a straightforward choice because account-based gives the central bank more control, and token-based gives the central bank perhaps less control within this context. And so there are some countries that chose the account-based. We eventually made a very pragmatic decision to go token-based for various reasons, including to make sure that we are not disintermediating banks. The ultimate outcome is what we've seen is even the account-based models are pivoting to create a hybrid of both. And that's because you cannot sustain an adoption of CBDC by throwing the banks out. You're going to impact intermediation, you're going to impact currency, you're going to impact credit. It's going to have a pass-through implication for monetary policy in ways that you cannot contemplate. So we were very clear to not go that route, sacrifice a bit of that control to be able to get a better and more stable environment. In terms of price stability, the issue with cryptocurrency now that we see we're dealing with, and I use this example, I remember at the time when I was doing an internal briefing, ATF, alcohol, tobacco, and firearms. These three things have they are such highly charged topics in many societies. If you take any element, any one of those. But society has found ways to accommodate them, even if we don't embrace it. And so cryptocurrencies are presenting themselves as a problem that if we were gone, it would be great, but it's not, and it's not going anywhere. So what do you do as a regulator? How do you contemplate accommodating in your framework without necessarily promoting it? This is very important to look at. There are some functional capabilities of the digital asset technology that are absolutely amazing, can transform the prospects of MSMEs, for instance, in terms of the ability to show up and demonstrate trust and legitimacy in an international transaction. All of those are still the same technology underpinnings that can help you achieve that. But when it comes to the use for payments, yes, it can have its stability implications, and therefore introducing time-old tested principles such as AML, KYC monitoring, transaction monitoring, and the rest are all ways of controlling the risk associated with them. The price, and then consumer education being the big element. So I was happy that also came up from Professor Noel. Consumer education is very important. So people understand Bitcoin is not something when you buy, it doubles next month. It can go down. You can be a rich man today. It can make you a pauper tomorrow. And similarly, it can be vice versa. But often, the uninformed person who engages in trading of crypto, especially the less prominent and stable ones, it's a quick way to lose your money. That kind of consumer awareness and education is very important to be able to control and manage the risks. I believe those are the questions.
Thank you. Sure, Kwame, thank you very much. We do have a lot more hands up, and certainly some other questions that have come through. Just maybe for you to reflect on and provide some response to this. As we speak, the Monetary Policy Committee is meeting. About 6 years ago, a guy in Nima told me he was into crypto, and that's what he used to buy different things. We know potentially there are people in Abosokai today who import all kinds of stuff and they pay with crypto. So question is, what's the implication of this crypto assets for currency stability, but also are we sitting on some crypto crisis? And how do we contain that before it happens? Because if you look at the history of financial crisis, they happen, then we react with some regulations. But this is moving at the speed that you just described. Are we sitting on crypto crisis? Please reflect on that, and I'll come back. We have a number of other questions on the gold coin, and I'll take this first. Good morning, team. I am a farmer at Akim Achansi in the Eastern region. South Ebrim Rural Bank is the only rural bank in the district. How can I invest in gold coin? I think that's to Na Aku. Then there's a question again on the gold coin. Can banks trade in this gold coin like we did with other government instruments? And that's from Mary and Kobia. So what happens if the gold coin is missing in case customer decides to keep it? And that's from Shadrach. What happens if the gold coin is missing? And then I have a question on how can the uptake of the gold coin, or how has been the uptake of the gold coin since its rollout? How has been the uptake of the gold coin since its rollout? And that's from Judith. I'll take the last one of the gold coin. Is the storage with the commercial bank or central bank coming with another cost? If yes, will this vary from bank to bank? And that's from Mary and Kobia. Let me take that again. Is the storage of the gold coin with the commercial bank or with the central bank? That's more the safekeeping of the gold coin. Would that come with an additional cost? And if yes, will this vary from bank to bank? So now, those are some questions for you. We'll take that and I'll go back to those who have their hands raised. So George, I've seen your hand. Norman, Edu, I've seen your hand. And then I believe Tasong, I've seen your hands as well. So I'll come back to you. Naku, do you want to provide some responses to the questions, please?
Yes, sir. Thank you. So the first question is a prospective investor who is in a rural area. How does he or she access a gold coin? We intend, and I believe we've started distributing to our regional offices and agencies. So in terms of Achim, I guess the closest regional office or agency will be Kufuridua. So the prospective investor will have to go to the Ghana Commercial Bank at Kufuridua to buy the gold coin. I believe that will be the most expedient way for someone who has a rural bank association and is out in the regions. Can banks trade the gold coin? No. The gold coin, as of today, is targeted only to retail customers. This is a way the central bank is trying to take excess liquidity out of the market and also grant retail customers alternative investment assets. So it's not geared for commercial banks. The commercial banks are being used as a distribution conduit and not for them to invest in. A commercial bank may, however, hold a redeemed coin for a few days if there is a prospective buyer, but they have a limited amount of time to return it to the central bank should they not have any customer who's interested in buying the gold coin in the short term. I would say not more than 1 week. Uptake of the gold coin. This speaks to what Prof said earlier. We need to have a massive education for investors and residents of Ghana as to what the gold coin entails, its benefits and its risk, so that we will get better participation in the alternative investment that we've introduced in the market. Bank of Ghana is working on an education project right now so that we could go through the media. I think we've done some work in the press media, but we want to use the media, the social media outlets, and any other source where we could work in tandem with the commercial banks to educate the public so as to garner more interest in the Ghana coin. Storage. Storage comes with a minimal fee. We have set a ceiling for the banks so that the investor does not have unnecessary cost related to having their gold coin stored either by the bank or eventually by the central bank. So it will vary from bank to bank, but there is a limit. So should any investor feel like they are being exploited, they can just report it to the Financial Stability Department of the central bank, and we will address the issue. Loss of the gold coin. I believe during my presentation, I indicated that that is a risk you take when you choose to carry your gold coin home with you. So the gold coin is a bearer instrument. It's just like carrying notes in your wallet. Should you lose it, that's it, it's gone. So it takes great caution to say that you would like to carry your gold coin home. You would have to put it in good safekeeping because it doesn't have a serial number or anything that would differentiate it from one from the other. So if anybody takes your gold coin, you're out of luck. Sorry. Thank you, sir.
Thank you so much, Naku. We want to get some quick responses on what we've heard so far in terms of understanding and awareness. And also, let me state that what we are doing here today at Chartered Institute of Bankers Ghana, as I indicated, our mandate is to promote public education or banking education. And so going forward on the public education side, we would continue to play a role in that. We also do financial literacy in a number of secondary schools at the moment. And I think that strategically, if we can get the younger ones understanding it, they can explain it better to their peers, but also to their parents. And so that's something that we can take off and see how we collaborate on that front. Before I go to the next set of questions and the hands that have been raised for a while, we just want to get your quick responses to a few questions, more on understanding and also willingness to use or invest in what we've had so far. Again, the link is being posted in the chat box. And so if you click on that for us, you've just seen the link posted. Please click on the link at this Mentimeter. Would like to get a sense of your willingness to use, whether it's the gold coin, invest in the gold coin, or any of the digital assets. So have you used crypto assets before? I think that's a question that we have now. So just indicate, for those of us, we have over 400 people on the call at the moment. For those of us on this call, have you used any of the digital assets before? And so please click on the link that has just been shared in your chat box and give us some thoughts. So I have 18 people saying no, 2 saying yes so far. We need some more responses. Please do that for us. Great. So this is on crypto assets in terms of those who have had some experience of using or those who have not. Okay. Great. So again, we'll count on your responses. We'll be taking this off very shortly. So thanks. Okay, so I guess for all of us on this call, this is quite informative as well in terms of what's already happening with digital assets or crypto assets, as we have discussed this morning. We're going to move on very quickly to the next question. And so please, again, we use the same link, and this is really testing willingness to use or invest in, whether it's the gold coin, the central bank digital currency, or the crypto assets that we've mentioned. So the question is, how likely are you to invest in or use the following? So the Ghana gold coin, crypto assets, or the central bank digital currency, the ECD. How likely? So it's either not likely, likely, most likely, definitely.
So, Robert, if I may ask, can you actually split that question up? Because one of it is an investment, the other one is currencies, like a means of payment. So I think the people's responses might not reflect their views independently of them. So maybe you can split it into one question on the gold coin, one question on the CBDC, and one question on cryptocurrencies or something.
Yes, Kwame, good point. The way we conceptualize this is the gold coin is for investment, isn't it?
Right.
The crypto assets, of course, is investment as well. So are you likely to?
So the crypto, Ghana's usage is
payment,
almost 70% payments, yes, as a payment instrument. So, yeah. And then both CBDC and payments and crypto, CBDC and crypto, yeah, are digital instruments of some sort. So I can actually like one and the other, but not the third. And that might reflect in my response. So I was just highlighting that it's a possibility and not too disruptive.
Sure. Sure. Okay. That's well noted. So, Kwame, thank you for that. We'll refine this question so that it's more specific to the gold coin or the crypto or the digital. So we'll do that. Meanwhile, whilst we get that sorted, may I take Norman? Your hand has been up for a while. Noma Edu Banfo, I believe. And then we'll go to George. Sorry for keeping you waiting for that long. Norman, are you here with us?
Please, can I be heard?
Yes.
Okay.
Please go ahead.
Yeah, many thanks for the opportunity. My question is more, skewed towards the Ghana Gold Coin. So by way of introduction, I must say that I commend the Bank of Ghana for the Ghana Gold Coin, introduction, and I think it's very strategic at this point in time, given the Ghanaian investment landscape as we look to dilute our investment and diversify in terms of portfolio from both wholesale and retail levels. I think one thing that Madam highlighted was the fact that there is some purchases that has actually gone on the market. If you see clearly, you realize that at the interbank level, the way we really expect that the Ghana gold coin purchases should go is not really how it is going. However, we've also observed that there's been some sensitization amongst banks to whip up the conversation. And I think also on the backdrop that during its introduction in the previous year, we also realized that there were some sketchy sentiments around gold introduction on the backdrop of Galamsey and what have you. But I think market has actually moved on, and I think it is looking positive. And as Prof did indicate, I also think clearly that education is the way to go, which should be able to sensitize banks to put the relevant operational framework in place to be able to do justice to this gold coin, albeit if we have the right frameworks to ensure security and all of that is in good shape. Fast forward to my question, I've not really seen a very succinct framework on the sales side of the Ghana gold coin, which I think to a very large extent would also impact its marketability, because it looks like we have a well-defined framework on the purchase side. I heard Madam trying to provide some response, and she did mention that if a client, seek to sell.
Sorry, Norman, if you
Yeah.
just go straight to the question. So what's the question, please?
Yeah, the question is simply that we need, a well-defined, framework around the sales side of the Ghana gold coin, right? As it stands now, most banks are trying to find their way around how it will be in terms of the value chain. Would customers, bring in a request to a bank for bank to also say that, okay, fine, I'm not ready to buy, so they should go to BOG. Within what time frame would that be? And putting into context, time value of money is also key. Remember that the price of the gold coin is actually a function of FX, and if FX should also drop, perhaps the customer might also lose value. So that side
Right.
of the the process is something that I think we should really fine tune. In fact, it's actually a recommendation. Okay,
That's
so
a suggestion.
for me,
Excellent.
for me, it's something that we should really fine tune, and I think it would improve the marketability of the gold coin. Thank you.
Thank you so much, Norman. Thank you. George. George, please, can you hear me? You may need to unmute. If George can hear me, then please unmute and speak.
Okay, if you can hear me.
Yes, I can, George.
Okay, so my question is on one particular digital currency security in Ghana called AKL Lumi. And the question is Bank of Ghana aware of their activities and have they been sanctioned to do whatever they are doing? So that's my question. And then on the gold coin, my suggestion is there should be a serial number since it is a coin or something. There should be a serial number so that when it gets stolen or it gets into the wrong hands, it could be traced. So that is my question and the suggestion. Thank you.
Thank you very much. Thank you, George. I'll go to Alfred. Alfred.
All right, thank you. Good morning to everyone on the call. Please, I'd like to talk about or ask a question with regards to the crypto, since we are talking about gold coin and crypto. Now, blockchain is one of the breakthrough technologies that has ever graced this landscape. Yet, these currencies, they go bust. Well, we hear from time to time that it has gone bust. Somebody has taken the money and they can't find where the money is, even though it has a hash on it. How come they are not able to trace the chain of travel to the extent that nobody is ever able to? Now, in relation to what Ghana or Bank of Ghana is about to roll out, I want to find out if there are measures in place to find out if somebody ever maybe go bust or get underground with the currency, they will find the person.
Okay, great. Thank you. Thank you very much. I will take one more and then we can get our experts to provide some responses. So I'll take Margaret. Margaret, please. Margaret, if you unmute for me, then you may ask your question or provide some suggestions and comments. Margaret. Okay, so unable to hear Margaret. Let's go to Tasson. I do hope I got the pronunciation right. Tasson.
Yes, it's Tasson. Thank you. So my question is pretty simple. So the ECD, I want to find out whether it's a cryptocurrency. I'm asking this knowing that cryptocurrencies come about from a lot of crypto mining activity. So if it is not a product of a crypto mining exercise, how does that become a cryptocurrency? And also, is it because Kwame didn't mention anything about crypto mining? I want to find out whether it is an activity they don't encourage, or what are some of the upside, opportunities there, or and also the downside risks to crypto mining. If you could just touch on that. Thank you.
All right, so we've taken quite a number, and Kwame, remember the question on the implication for monetary policy. So I'll start with Kwame, and then we'll come to Aku.
Okay. Oh, thank you very much. So a few quick responses. I think the first one you raised had to do with the issue of whether we are sitting on a crypto crisis and the currency stability implications. This is one of the peculiar circumstances where if we're indifferent and dismissive of crypto, we're actually sitting on a bigger problem. I made that reference to ATF, alcohol, tobacco, and firearms, for a reason, but it was to demonstrate that none of these three elements are of particular support broadly in most societies: alcohol, tobacco, and firearms. But for the fact that there are some who have a reason, whether personal or otherwise, and have an interest in possessing it, society's found a way to accommodate it. But also by ensuring that, just as you have on alcohol labels, alcohol, this drink may be dangerous for pregnant women. Alcohol impairs your ability to operate a vehicle. All those consumer education and the rest are basically part of our attempt not to promote, but to accommodate. There are examples here on this continent, and you can look back to the early 2020s to 2021, 2022, where Nigeria was having some challenges with remittances drying up in the formal channel. So people sending money through traditional MTUs and traditional channels into Nigeria was drying up very, very badly. And what that meant was FX locally was becoming more scarce at every point in time. And we saw the implication on the Naira. This has happened in other countries as well. But look at it this way. There were crypto-based businesses that would facilitate the transfer of funds. And let's do a very simple math. How much would it cost to send $10,000 using your traditional SWIFT? Look at the cost of that. Then check how much it actually costs to use one of these service providers who at the time had been outrightly banned in many of these countries. But if they sent that same money to you, to let's say China, and an example was given of the Abusukai guys and the rest, they send money through these channels, it costs them fractions. Sometimes for that value, it costs them somewhere around $5 to $10. Compare that to how much it would have cost them through their traditional channel. So what do you think started happening? Outbound was happening through the crypto channel, inbound was coming through there as well. Now, that in itself is a broader financial stability risk than safe accommodation in the ecosystem. And I highlighted the Financial Stability Board, the BCBS, right? FATF, FATF, all of them have slowly confronted the reality of saying, okay, maybe we need to look at this differently, because that's where we are. And if you have a parallel system that is becoming more popular in facilitating cross-border trade for your country, it has a significant implication, not just on currency stability, but now you're even starting to creep into financial system integrity issues. Because at any point in time, a smaller percentage of your transactions in the country and trade is actually coming through your formal channel and through the banking sector. And even worse, the exchange rate regime in some of these black markets and underground operations are so far out there that in the end, it begins to push your currency value lower and lower. And you saw this with the I think it was late 2022, a few banks who may have unknowingly be processing transactions for crypto platforms, and they woke up one morning and realized the exchange rates that was used versus how much it actually cost them was so bad that millions, tens of millions of cedis had been lost. And so some banks even tried going into customers' accounts to try and recover what their lost, margin was. And then that came on social media and there was a public outcry about that. That's an example of an unregulated activity and its implication, both financial stability wise and particularly a system integrity from that perspective as well. So it's about safe operations and being able to do that. The Lumi folks, we've seen them. They make some very interesting claims in terms of their legitimacy, but I believe there was a public notice that was issued that we neither know who they are or do we recognize the African Diasporan Central Bank, where they have all kinds of things written. We do not know about any of that. We do not recognize that institution. Somehow it's an African institution out of Hawaii, was instituted in Hawaii. I'm not sure if Africa has any shortage of land or anything, but this is something that we do not. And frankly, even within a regulated crypto market, entities like that are unlikely to survive because of the nature and what it seems their intention may be. The issue of whether we might go bust, cryptos go bust, I think we need to separate two things. Digital assets on the crypto type digital assets and stable coins. Stable coins are pegged to the dollar or pegged to the euro or pegged to the naira. And you see Nigeria has actually issued, there's a Nigerian stable coin that has been issued now. So the stable coins are generally stable for as long as they remain compliant with ensuring that the assets that are supposed to back the tokens are there. It's almost the equivalent of the mobile money, electronic money issuing model. For every 1 cedi I put in a trust account, I can issue 1 cedi of mobile money token. The stable coins are similar to that. And that's the one that the Abusu kind folks and the rest that you mentioned, when they want to do transactions, they don't even know what is being used. Those people who facilitate for them, and our investigations find these things out, those people are typically using those stable coins. So the most popular, which I highlighted in my presentation, Bitcoin, and then Tether, USDT, and now we're seeing more stable coin growth because access is also increasing there. So that's what's happening. Now on the crypto side, yes, it has volatility. The Ethereums are typically not as volatile, even those are volatile, but they're not as volatile compared to the Ethereums and Bitcoins compared to some of the smaller tokens, the Solanas. They are highly volatile. There are tokens you've never heard of, right? These tokens are all over the map. Anybody wakes up and creates a token. You can actually create a token this morning and publish it. And because it's a decentralized environment right now, it can be somewhere and people can actually buy it. The problem is it will collapse. The pricing will collapse badly. It can go anywhere from $700 down to zero, down to a few cents, and suddenly everybody's lost their money. This is why I highlight the issue of consumer education and protection. I gave the example of how alcohol has labels. You see it even with cigarettes. They have pictures of your liver looking like you die tomorrow if you smoke just one or even take a puff. But that's the idea. People need to know. And you don't just do this as a function of the central bank or, commercial banks who are involved in maybe if there's a future where that policy consideration is there that it should be accommodated or it should be legitimized, at least for safe operations. The coalition, the typical coalition that will be doing consumer education, it should not be left there. Disclosure is a big element. Disclosure, not just in the form of, details that are written to graduate education level where people can't read and understand it. They are looking at these 20 pages of disclosures on a small device and clicking yes. No, that's not what we want. We want proper consumer education that should accompany the use of the product so that consumers are clearly aware what they are getting themselves into. Because the example you gave is a classic case of I'm into Bitcoin. No, you're not. You've invested in a third-party scheme that says they are invested in Bitcoin, which is similar to what Nam1 was positioning. So Naku mentioned that while we are giving you a gold token, NAM1, and the whole NAM1 thing was a whole issue on its own as to whether there was actual gold and the rest, whether there was enough gold, all those things. I do not even know what they were into. But the issue is people make promises to people, and those unsuspecting consumers wind up holding the bag when everything falls apart. That's why our cautions must be taken seriously, and that's why we'll continue to step up that effort to make sure consumers are aware. Because finally, maybe also mention on this particular issue, unlike CBDCs, which are currencies, so therefore would not go bust. If CBDC is going bust, your CD is going bust. That's what it is. Because CBDC is not something else. Just like you have a coin for the CD and you have a note, paper note for the CD, this is just a dematerialized version. So you can have a 10 CD note in a digital version on your phone. Your eyes just don't see it, but at the deep software level, it's actually a 10 CD note. So that's the only difference. So those don't go bust. Whatever the CD value is, that's what it is. But in this case, where we have all these people jumping at it, that's why it's important we push consumer education so that people who understand and can safely use stable coins and digital assets, when they are using it, you don't have much of a risk because they know what you're doing. It's like trading Forex or trading any kind of stock. You know what you're doing, or at least you should know what you're doing. The big problem is where the trend is pushing people in one direction, saying crypto is the newest thing. What are you doing not having one? You should go put your money into crypto. It's the quickest way to lose your money. And that education needs to get to people. My final response is on the last two questions that were asked, whether the ECD is a cryptocurrency. So I highlighted the fact that it's not a cryptocurrency, but the issue of mining. Mining is not actually, so two things. Blockchain is not necessarily a part of cryptocurrency or CBDC. You can use blockchain to issue anything in a tokenized form, right? Anything in it, any tokenized assets, you can issue blockchain, use blockchain to issue it, but you do not need blockchain to issue digital tokens. It's very important. It's like the tool of choice that you make a decision on. Secondly, the idea of mining is very simple. So blockchains, as I described earlier in my presentation, they are typically consensus models. So there's proof of work, there's proof of stake, there's proof of burn, there's delegated proof of stake. There are all kinds of consensus models that exist in the world. And those consensus models are basically saying, Kwame Opong says he has sent Michael or Senyo Kluche 10 cedis. Is it true or not? Look into your system, confirm whether it's true or not. All of you on this call will look into your system. You raise your hand and say, indeed, it is true. Kwame Opong sent Senyo Kluche and Michael 10 cedis. Once that happens, there's validation. Then what happens? The transaction completes, right? That's a consensus model at its very rudimentary or maybe a high-level description of it, or maybe an oversimplification to make it simpler. Now, the mining component is actually a calculation of certain mathematical problems. So your system is consistently trying to calculate. So that the network is generating certain questions. Whoever can answer the question, you get a small reward, which is a token. So mining itself is not a financial stability risk. It's probably an energy risk and a sustainability problem, but it's not a financial stability risk because the tokens you are receiving, you can actually mine in a country that says crypto is prohibited here. Because what you're doing, once you are earning anything, if you're not spending it in the country or using it there, then that's not a problem. So mining itself is a purely independent activity. And then the other question is, are there upsides and downside to the use of, I guess, crypto, CBDC and crypto? But let me maybe clarify on both. CBDC being currency, I think that's more straightforward. It's just making sure that even mobile money today, for you to start using it, if you don't have bank to wallet or someone to send you mobile money to start, you have to go to an agent, give them cash, they load your account. So if I'm a farmer living in a village and I've been paid in ECD, when I come to town and I want to top up mobile money to do a transaction or two, maybe send money to a relative in school or something, I can give that CBDC to an agent, right? Exchange it with an agent. They top me up as we would have done with cash, and I do my transactions on mobile money because everybody who lives offline and off the grid actually every now and then comes into the urban centers. So that's an example of the practical use of CBDC. With cryptocurrencies, the upside and downside, or I think you meant, okay, on mining, the upside and downside of mining and cryptocurrencies. Cryptocurrencies, look, there are legitimate users like dentists, lawyers, and the rest, traders, who want to pay a Chinese supplier. Instantly like that, they can make that trade. Once they have a stable coin, it's just a simple scan of a QR code, the merchant receives it, and now their goods are being prepared for shipment. These are some of the reasons why we thought it wise to create a safe alternative backed by governments, the ECD, backed by the central bank, to afford people the opportunity to conduct a similar transaction with a similar user experience, except it's safer because you have the guarantee of the central bank behind you. The other one, you have a guarantee of, you don't have the guarantee of even Satoshi Nakamoto. You're trusting the system because it's built to be trustless. Does not require you to trust me because inherently that's how the blockchain underlying it was built. So this is really what it comes down to. I hope that clarifies it.
Yes, thank you so much, Kwame. And let me say that typically we would end this at 12. It appears we have quite a number of questions to go through. May I just ask your permission? Kwame, do you still have some time to spare with us? And so it's not when Prof. If we extend this to, say, about 1/2 the hour, if that's okay.
I'm fine, my side.
Okay.
That's fine with me too.
Okay. So, okay, so I have a few
Robert,
more
were you asking for my input on?
No, we're extending this time. We've gone past the time, so we're just asking your permission to continue till 1/2.
Oh, yes. So I'm going to drop off this call to go on to another call. But let me just make a quick, really very quick point in terms of that, just on the back of the highly educative stuff that Kwame had talked about. If you look at the whole start of these crypto issues, starts with the 2008 publication that came to us, and it was in response really to it was in response really to distrust in the financial integration processes, including the central bank's own roles, and where financial assets had been badly damaged in terms of their value, etc., and things like that. So one of the key things that we've got to do, just much broader, beyond the currency issues, etc., is to ensure that the macroeconomy is managed properly. Number two, the financial system is managed properly, so people have confidence and trust in the system, so that they will use the system. Because if you go way out on various cryptos, as Swami said, you run into trouble because of the volatility, unless your appetite is for volatility. So stable coins pegged against a de facto reserve currency is important. And then central bank digital currencies are fairly important in that respect. But those two are anchored really very much on those who are managing the economy, particularly the monetary side, are doing their work in such a way that there is confidence in the financial sector. Then almost all the big risk and things like that associated with the far out cryptos we can avoid, because the market won't select them with proper education of the market. So that's what I have to say. Robert, unfortunately, I thought we were closing at 12 and I have to jump on another call.
That's understandable. Thank you. Thank you so much, Prof. So very quickly, we're putting up the poll now. Whilst that's being done, and please complete this for us. But I do have a few more questions. In fact, lots more questions on the cryptocurrency side, and then also on the gold coin side. So the question we've put up is, how likely are you to invest in the gold coin, the Ghana gold coin? And so please complete that for us. Most likely, likely. Okay, not likely. Okay, definitely. Okay. Please, for those who are still here, we kindly request that you complete this for us. This is helpful, certainly to the policymakers and those who are the regulators in this space, and also definitely all of us who are interested in this. Okay. So, how likely are you to invest in the Ghana gold coin? Okay, we're getting some very good responses, but we need a lot more of you to please complete this for us. Use the link that has been posted and just complete us for us. Okay. Interesting. So, okay, we'll take maybe just about 30 more seconds on this one, and then we'll move on to the next. Okay. How likely are you to invest in the Ghana gold coin? Likely 20, not likely 10, most likely, and then definitely. So if you add definitely to most likely, then that's about, okay. Great. So we'll move on to the next question very quickly. So how likely are you to invest in crypto assets? Earlier, we asked the question whether you have used it before. With today's information that we've had, now that there's awareness and understanding, we want to gauge, okay, for those of us on this call, how likely are you to invest in crypto assets or use it? Okay. Okay. We're grateful for a few more responses. Thank you very much for responding to this for us. Okay. So we would then take the next, maybe the last question. Well, 30 seconds on this one, and then we'll move. Okay, great. So we'll take the next one, which is how likely I used to use the central bank digital currency, which is the ECD, based on the explanation and the education that we've had today. Okay. We have way over 370 people on this call, and I think this responses are very, very helpful to us as educators, but also to the operators, that's the banks, and certainly to the regulators. So if you think about the financial sector in Ghana, it rests on three legs: the regulator, which is Bank of Ghana, the operator, which is the banks, and then the educator, which is CIB Ghana, and I believe other professional or educational institutions as well. So this is really helpful to us. I'll pivot to maybe the last set of questions, and hopefully we can wrap this up. This is on the gold coin. And Naku, please, if you recall, there was a question around, or more a suggestion around the sales side framework, but then also if we can have some serial numbers to that, so that if there's some traceability. But there are further questions. So this one says, given the Ghana gold coin price is the cedi equivalent of 8 US dollar price, it is possible, or is it possible? It is possible the same dollar amount today may translate into multiple times its CD equivalent in the short term, given the near daily depreciation of the CD. Does the central bank not take this into consideration when marketing Ghana gold coin to resident Ghanaians? Okay, I do hope the question is clear. Given the CD equivalent of $8 price, it is possible the same dollar amount today may translate into multiple times ACD equivalent in the short term, given the near daily depreciation of the CD. Does the central bank not take this into consideration when marketing the gold coin to resident Ghanaians? So that's the first question. The second one is, why don't we set a benchmark like we have the GRR, which is a Ghana reference rate, and use it to determine the price of the gold coin, since it is targeted or since its target market is mainly local? Why don't we set a benchmark like the Ghana reference rate and use it to determine the price of the gold coin, since its target market is mainly Ghanaians? That's on the gold coin. I believe that's about it. And I'll go to the crypto, the questions that we still have. I strongly believe that considering the security and the ownership of central bank digital currency, it is the future of cryptocurrency, and Bank of Ghana should promise the wholesale the wholesale CDC or CBDC, and later add the retail to it. This call for banks having a dedicated and capable unit or departments with the right IT infrastructure to support and promote central bank digital currencies. This is from Michael. And then there is a question, please, what are the investment options or mediums for issuers or managers of cryptocurrencies around the globe? That's from William. Question again is, please, what are the investment options or mediums for issuers or managers of cryptocurrencies around the globe? Then the last one is, there is a digital currency called AKL. I think this has been addressed by Kwame already. So those are the questions. Maybe we'll go with Aku, and then we'll come to Kwame and wrap up. And please, if you keep it brief for us, that would be great, so that we can stick to the time.
Okay.
Now,
thank you, sir.
Thanks.
Yes, please. I'm
Sure.
here. Okay, so to Norman, thank you for your comments and suggestion. For the sales framework, I believe it's quite clear. Any individual who is interested in buying the gold coin should go to their commercial bank. You should have an account at the commercial bank and indicate your interest. To hedge against volatility of the gold price, the day you put in your request, your gold price, the price of your gold coin is locked for that day's price. So should price fall or increase, you are not impacted within the 2-day range within which you receive your coin, or your coin goes into safe deposit. So that is how that structure works. And the reverse happens if you wish to redeem your gold coin. So I believe that in terms of sales framework, it's quite clear and quite straightforward how we intend to do it. We try to keep this as simple as possible so people are attracted to purchasing the gold coin. In terms of the uptick in banks' participation, I think what is happening is that a lot of banks have to operationalize selling the gold coin in their institutions. So they are getting their legal framework, there are policies in place before they can actually participate. We've had several engagements with banks, and I'm hopeful that they'll get those processes in so that we can see the gold coin getting out to investors as intended when it was launched in September. The next question was, I think that, and then there's a question about taking into consideration the depreciating cedi and how that could impact the gold price should gold prices stay stable. What is happening here is, as we mentioned, one of the rationales behind introducing the gold coin was to enable Ghanaian citizens and residents in Ghana benefit from the domestic gold purchase program. We've experienced stability in the exchange rate for the past few weeks. And we at the bank expect that this will continue. So we don't expect a depreciating cedi as badly as we've had the past few years. That said, that should impact the cedi equivalent that you would use to purchase the gold coin. The gold prices are moving upward, and that is the one that has been impacting the change in cedi equivalent you use. But in terms of the exchange rate, it's been pretty stable, and we expect it to continue considering what we are doing with the benefits of the gold program we have right now. Using a benchmark to set the gold coin instead of a global benchmark. It will be surprising to note that even in the local gold market, it's the global benchmarks that they use. In the gold market, down to the miner, they use the LME benchmark to determine the prices of gold in Ghana. Because Ghana gold is seen as better quality gold, it actually sells at a premium over gold prices in the global world. So we're using the London Bullion Market Association auction price in the afternoon auction price. And for now, we believe that that's a good way of valuing the gold coin. The gold coin is still new. We are open to suggestions and ideas. So as it evolves, if we deem it necessary to change it to use a local benchmark, we'll do that. But for now, we believe that the LBMA PM price is actually a very fair benchmark to use to value the coin. Thank you, sir.
Thank you so much, Aku. Kwame, as we wrap this up.
Yes, thank you. So I think there was a question about exploring wholesale CBDC before retail, and I take the question as input. Our primary question is for CBDC to be successful, it has to be accepted at a retail level for it to have a long-term future, and that's the reason why you're seeing many countries investing at that level first. Because if we manage to do it amongst ourselves, and that's as far as it goes, we will not benefit from the immense potential of CBDC at the retail level. The same requirements you would need to adjust to integrate and to participate in the processing, holding, and transacting with CBDC as a commercial bank, whether wholesale or as wholesale, will be same as retail. The only difference is that you now have consumer applications, which you already have, mobile apps and internet banking, and the channels through which digital transactions can be effected. And so you're just integrating CBDC as one more quote unquote product, except it's just the underlying currency that enables your existing suite of products. So that's really the update, the reason why we're looking at CBDC from this perspective. Also, you actually can't benefit commercially from mobile money, from CBDC. Thank you.
Thank you so much. I'd like to just use the opportunity to thank you, Kwame, and certainly thank you, Naku and Prof, for this insightful, educative, and impactful program today, and your insights shared with us, very useful. As an institute, like I said, our mandate is to promote banking education, but also regulate the practice of the banking profession. And therefore, I do hope that Today's session has been educative, and that moves us forward in terms of delivering on the mandate of the Institute. But as I said earlier on, we all have work to do in terms of the public education. As an institute, we are more than happy to collaborate with the central bank and other stakeholders to continue to bring this awareness and understanding to these emerging areas. And of course, building the capabilities and capacities as well of trusted professionals who work in the banking industry. There are upcoming programs. Tomorrow and tomorrow next, we have AI, enterprise AI. How do you leverage your internal data to develop your own AI capabilities in-house to shape the future, create more insight and deliver value? Because we sit as financial institutions, we sit on significant data. So we do have a very renowned expert in this area who has done this across continents. John Kamara is in town, and he will be facilitating this session at the Institute Challenge Your Bankers Ghana here in East Legon tomorrow and Thursday. So it's a 2-day session. We actively encourage those on the call, and if you can extend this to others as well to join. It's in person, like I said, there's a price to it. But remember, as an institute, we don't depend on public funds, i.e. we are not subvented by government. And so these are programs that we do to support our operational activities. So we encourage maximum participation. And then, of course, we have compliance and regulatory masterclass for banks. There are quite a number of moving parts when it comes to compliance, whether it's on the digital front or the regular compliance related matters. And so again, as an institute, come 9th to the 10th of April, that program will be running here at the institute. Of course, we have our 3rd cohort of environmental, social, and governance certification program. The 2nd cohort is about wrapping up, and so this is a 10-week program. It's over a 10-week program, 2 days per week, every other week, 2 days per week, every other week, over a 10-week, a 10-week period. And this is a collaboration between Challenge Your Bankers Ghana and IFC, which is part of the World Bank Group, and then the Environmental Protection Agency. And so we encourage, again, participation. Once again, we'd like to say a big thank you for joining us this morning. We have actually posted a feedback form for this program, more specifically to get your feedback on how we can improve future programs. Please do take a few minutes to complete this for us. On that note, on behalf of the Governing Council of Challenge Your Bankers Ghana, and on behalf of colleagues here at the Institute, thank you. Thank you for joining us this morning. And thank you to Kwame Opon, Director of Fintechs and Innovation at the Bank of Ghana, and Na Aku Nate, who is responsible for managing the gold coin at the central bank, and to Professor Tego, who has also provided some input. Like I said, he's a public intellectual, and he's a faculty member on the Chartered Banker for Executive Leadership Program. We have other faculty members who are Al-Hassan Andani, Chief Al-Hassan Andani, Albert ACN, and these are very experienced bankers, and they are giving back to executives. So if you haven't enrolled on this program, the Executive Chartered Banker Program is for people in key management positions. And if you look at Act 930, it defines key management position. I see a hand up. So this is Raf. Raf, you have a comment or a question? We actually wrapping this up. Raf.
I asked a question at the comment section, but I've monitored, but it has not been answered. I wanted to
my
find
apologies.
out,
What was the question?
how much do you need to start trading any of the products we have just been taught on?
sorry, the question again, how much do you need?
Yes, if you want to trade in the, and if you want to the ECD or the cryptocurrency, how much do you need to start with?
Okay. I'm not okay, great. So, Kwame,
Is my question okay?
Yeah, your question is
yes.
okay.
Let me.
Kwame, do you have a response on this?
Yes, I can quickly clarify. So for the ECD, there isn't actually a cost to trading. It's really like having 10 CD notes and going to the bank and asking for them to give you 10 CD coins, right? You're just exchanging and you can transact with coins. And similarly, you can transact with the digital version of the CD. So ECD is the CD. It's not a different instrument, it's the CD, just a paperless version of the CD. On the cryptocurrency, in this case, Bitcoin and the rest, you can actually buy small fractions of it. So today, every currency has 2 decimal points behind it, right? In the case of Bitcoin, for instance, it has 8 decimal points behind it, and each is called 1 Satoshi, right? So it's you can buy 1 Bitcoin, or you can buy a Satoshi. It's really that simple. So you can buy small fractions of the cryptocurrency. And so you don't particularly have a threshold for participation. It's a very, very, very thin requirement to participate. Thank you.
I'm grateful, sir.
And for the gold coin,
Naku, yes.
yes, and for the gold coin, the lowest denomination is a 1/4 ounce, and as of today, it's 12,000 cedis, 776.37. So that's the minimum you need, about 13,000 cedis to buy a 1/4 ounce gold coin.
Excellent. On that note, we would like to say a big thank you to all of you for joining us today, and thank you for the insight and the feedback that you've provided. Again, like I said, there are upcoming programs. Please look out for the next thought leadership event, which I believe will be even more exciting. But once again, Kwame, Naku, Prof, thank you very, very much, and have a fantastic afternoon. Bye-bye for now. Bye.